All right, hey, good morning, everybody. Shane here from the Brookings Home Team, powered by Century 21, and it is a special edition of the Monday Morning Mortgage Tip. I'm over here with Mark from Great Western and Chad from VRS Accounting. We're going to actually talk a little bit about the MCC Tax Credit. I've had a few questions lately on that and how that works, and we thought, why not bring in Mark and Chad here, and you'll be able to learn a little bit on the lending side and a little bit on the accounting side, or the tax side of maybe how that will help you in the long run. So this may go a little bit longer than normal, so please bear with us. But with that being said, thanks Chad and Mark for joining me today. And Mark, I'll go ahead and let you take it over.
Good. Thank you, Shane. Thanks again, Chad, for letting us set up here.
Absolutely.
The MCC Tax Credit is a mortgage credit certificate. It's geared towards first-time home buyers. There's a couple income regulations, I guess, depending on how many people will be in the house. For Brookings County, for 2 people, I believe it's $69,000, and then for 3 or more, it's $79,000 and like $350. So those are some of the ones that specifically pertain to Brookings County. It does vary by county. The maximum home price that you can purchase for this to apply would be $250,200. So that is something that the lender will help regulate for you. But the cost of it, there's a $750 fee, and that fee is reduced if you're getting a South Dakota Housing if you're using the South Dakota Housing First-Time Homebuyer Program. So that fee is reduced to $250. The participating lender can also charge $250. Great Western Bank does not. So you do just have the $250 fee if using one of the programs. So I guess at the time that you apply and you're using one of these programs, through the loan process, there's a form that I would have you either elect that you would like to purchase this or not purchase this. So as a lender, we're certainly not qualified to give tax advice. We basically go over the form, what it is, and then at that point, we tell you to contact your accountant, which that's where Chad would come into the equation and help give you the tax advice as to whether or not you should elect it or not. So,
Okay. All right.
So with that being said, I guess, Chad, I don't know if you have a scenario or what you have that maybe, the average borrower that fits those income guidelines, if you got something in mind.
Yep, absolutely. And I appreciate thank you both, Mark and Shane, for having me here today as well. And like Mark was saying, that the credit is geared towards first-time home buyers. Basically, it's a maximum credit of up to $2,000. So that's the most we can claim on the tax return each year for the credit. Now, it is a non-refundable credit, so what that means, it can offset your income tax, but it cannot be refunded directly to you. So as long as you have some income tax available, you can maximize the credit. Any portion that is not used will then carry forward up to 3 years until it's used up. So basically, for the most part, it won't disappear, but it's just going to continue to carry forward until we can actually utilize it all. Some advantages now that we haven't had in the past is with the recent tax reform. We talked about one of our previous ones. The standard deduction previously went from about $12,000 up to $24,000 for a married couple. Well, that's going to make it much harder to itemize now than what it had in the past. And just a quick recap, your itemized deductions are typically your mortgage interest on your home, property taxes on your home, charitable contributions, and potentially some major medical expenses. So now that doubling the standard deduction to $24,000 becomes very hard to be able to itemize and take a deduction for your mortgage interest. Well, that's where this MCC credit can come in, is that credit is not contingent upon you being able to itemize. So credit's going to come through separate from being able to itemize. So there's a really good opportunity for a lot of people who can no longer itemize because their interest and deductions are too low. They can take advantage of this up to $2,000 tax credit every year over the life of their loan. There's also some immediate savings then too as well, is that if you're able to maximize that credit, you can also reduce the withholding on your W-2 from your wages. to actually get more money back in your pocket each and every paycheck. So if you qualify for the full $2,000 tax credit, there should be savings about $167 every single month over the course of the year. Typically what I've seen, you can maybe verify this, Mark, or not, is that the interest rates are slightly higher on the MCC loans than a traditional loan would be.
That is correct, and that's one reason sometimes people say that they're not interested in it because it can raise the monthly payment just that little bit. However, I think if it's properly explained, everybody's situation is a little bit different, but if it's properly explained, I think they'd see that come tax filing time, it would be a big benefit, and even though they'd be paying slightly more interest, they're going to be saving more money in the long run. I think as long as that credit applies for as long as they're in the home. I guess there's also a form, a certificate that they get, right? That I believe, and that's what they have to bring in. So, not a lot of paperwork, but obviously, like they still have to bring that in come tax time in order to get the credit. So, that is something I guess that they need to do. But
yep, and that's what I see with our clients then too, is that they come and ask about this credit. We take a quick look and say, okay, what's your interest rate going to be with and without the loan? What are you going to pay over the life of that loan? Now, what's your potential savings for the tax credit? And more times than not, especially with the tax reform now, the credit's probably going to be the better option for them overall. One thing I would say then too is that this isn't geared for a short-term home purchase. That if you do sell your home within 9 years, there is some potential repayment recapture on that credit. So if you are thinking of selling your home within that 9-year span, I'd encourage you to talk to your tax advisor and see if there's certain exclusions that can get you out of any sort of repayment and what that repayment includes overall.
Okay. Awesome. So great stuff. Obviously, we could sit here all day and probably talk a little bit about this. One of the things I did want to bring up as I was sitting here, Mark, I was told too that if the potential buyer is kind of a debt to income ratio difference, that they could take what their savings, what they would be saving in this tax credit, they could apply that.
I think that was South Dakota Housing's. That was one of the main purposes that they established it to start with, was to utilize that credit to help people with their debt to income ratio get back that credit towards the income so that they can qualify easier for the loan. Correct. That was basically the purpose of setting up the MCC tax credit to start with.
Okay.
Yep. And that's directly South Dakota Housing Development Authority, sdhda.org. They encourage you to go to their website as well. They have videos out there pertaining to the subject as well. So
okay. And I was going to mention I will have the website on this post here. Perfect. As soon as I get back to do that and get that ready to go. As always too, I'll have Chad and Mark's information on the top, on the bottom, on the sides, wherever you see it. Look for that information. Great stuff. If you have any questions on this MCC tax credit, give one of these guys a call here. They'd certainly be happy to talk to you and give you some information. Once you get that figured out, give me a call and we'll start taking a look at some homes there for you. So with that being said, that is the longer version at a special location here for the Monday morning mortgage tip. So thanks guys for doing this today. I appreciate it.
Thanks, Jim.
And hopefully you guys got some good information. Again, if not, reach out to them. They'll be happy to talk to you. So till next Monday, guys, we'll talk to you later.
Right.
See ya.
Thank you.